Good morning and good afternoon, and welcome to the September 2022 DTN WASDE webinar. My name is Stephanie Carpenter with DTN, your moderator, and with me today is Todd Hultman, lead market analyst for DTN. During this event, all participants will be in a listen-only mode, but you can ask questions at any time during the event. To do this, click the Q&A section located on the bottom right of your screen to open the Q&A panel. From there, type your question in the box at the bottom and click the send button. We encourage you to ask questions at any time during the presentation. Your questions will not be viewable by other attendees and will be addressed during the Q&A at the end of the session. Also, this event is being recorded and a rebroadcast link will be on our DTN website within 48 hours. And as a reminder, our web address is dtn.com. We're ready to begin the webinar, so I'll turn it over to Todd.
Underway here in just a second. Today's title, USDA's first field-based yield estimate. So this is a report that we've long been awaiting for, and especially as the yield guessing games have gone on here at DTN. We've had our own digital yield tour. You also have heard of more traditional Midwestern crop tours that have been out there, but today we finally turn to USDA and see what it is that they're finding in the fields, and that's what's got everyone's interest. I should also mention that last week we got word from NASS that they're also doing a review of planting estimates, which we'll soon see in this week's report. So we have kind of two variables there at play here in today's report. So lots to talk about. Let's go ahead and get into and see what USDA said about the corn estimates here for today, September 12th. Here's the U.S. balance sheet from USDA, and we'll start our attention in the second column to the left. In the red rectangle, you see an old crop ending stocks estimate of 1.525 billion bushels. That's just down 5 million bushels, but there's two changes I want you to notice, and this is in the old crop season, remember, that just ended on August 31st. The first change was USDA reduced the ethanol production estimate down to 5.33 billion bushels of corn. That's a 20 million bushel drop. At the same time, USDA increased the export estimate 25 million bushels to 2.475 billion bushels. So net overall, there was just a 5 million bushel increase in demand among those two changes, and that's what reduced our old crop ending stocks estimate. Now, one of the reasons this is important today is because, as you probably know, USDA has had technical difficulties in issuing their export sales data. We haven't heard anything from them since the August 11th report. They're supposed to update their report September 15th, so that's Thursday of this week. We should get a new updated weekly export sales report from USDA, actually making up for the 4 weeks that we've missed. But until we get to that report on Thursday, this is our best guess of how USDA sees the old crop estimates finishing out for corn exports, and 2.475 being slightly better than expected recently is fairly good news. Okay, now for the excitement of the day, turn your attention to the far right column. You see two rectangles. Let's start with the upper rectangle, and it's there. We're going to first notice that the planting estimate for corn was reduced by 1.2 million acres in this report. Instead of 89.8 million, USDA is now looking at a crop planted on 88.6 million acres. Obviously, that's going to reduce our crop total. Back on August 22nd, FSA data was released. It also had some technical issues and came 10 days late, but when it was released, it showed just over 3 million acres of prevented plantings in corn. So coming from that, or I should say that partly contributed to today's change in what USDA has found. They've reduced the planting estimate to 88.6. There was an updated report of prevented acres as I was preparing this report, but I haven't had time to get to it yet. So we'll have to report on that later in DTN. But here's the estimate, planting estimate today, 88.6. The new yield estimate, 172.5. That's down from last month's estimate of 175.4. And if you've been reading DTN, you may know that our digital yield tour had an update late last week, a collaboration with Grow Intelligence, and their yield estimate was at 170 even bushels an acre. And so USDA is coming our way a little more on that, and perhaps will as we get further into harvest. We'll see. But there was widespread expectation today for a lower yield estimate. The crop size now just under 14 billion bushels. USDA is looking for a 13.94 billion bushel crop. That is 415 million bushels less than they estimated last week. So as you can imagine, the ending stocks estimate is going to change. And why not? Let's just go ahead and drop down to the bottom square in that same column, and we'll see the new ending stocks estimate for corn for the new season, 1.219 billion bushels. That's slightly higher than expected, but it's still the lowest ending corn stocks we've seen in 10 years if it holds true to the end of the season. You see 3 arrows there between the 2 rectangles. Those are some demand changes that I need to point out. The first, going from top to bottom, the upper arrow shows that feed demand was reduced by 100 million bushels. It's now down to 5.225 billion bushels. Ethanol demand in the new season, they reduced the estimate to 50 million bushels. And the export demand was reduced in the new season by 50 million bushels, or excuse me, by 100 million bushels, now down to 2.275 billion bushels. So put them all together, that's a 250 million bushel reduction. So looking at a much smaller corn crop, USDA adjusting their demand figures with the expectation of less corn being available in the new season. We still come out with that lower ending stocks estimate, 1.219 billion bushels. As I said, that's the lowest ending stocks in 10 years, if that estimate holds true. As we're speaking today, corn is very much up on the news, trading 12 cents higher as we talk. Let's take a look at what else. Here are the state-by-state yields that USDA estimated today. And in the case of corn, we see obviously the best yields in the country, no surprise, Illinois and Iowa. Illinois coming in at 204, Iowa at 200 million bushels. While those are very good, for Iowa, that's actually down 5 from a year ago. For Illinois, that's up a couple bushels from a year ago. And then outside of that kind of prime central area, you see where the problems were. And of course, especially in the western plains where we had a lot of hot and dry weather this summer and still have hot and dry conditions. So we saw Nebraska down to 176. That's down from 194 a year ago. You see the Dakotas, Kansas, Missouri, Kentucky, all taking hits to their yield estimates with this year's hot, dry weather for a lot of those areas. On the world balance sheet, let's take a look at what USDA said for corn, and in the upper right corner, we see the overall ending stocks estimate for world corn is reduced from 306.7 down to 304.5 million metric tons. That's actually a little more than the trade was looking for, but again, it is a reduction. And of course, part of that was because the U.S. now is expecting a smaller corn crop, but we see some other adjustments. So if you look in the second column and point down toward the lower part of the page, we see that in Ukraine, the corn crop estimate was increased from 30 million metric tons up to 31.5. So evidently the corn crop, which is grown mostly in north central Ukraine, has done pretty well this year. The European Union, no surprise, their corn crop continues to show the stress of hot and dry conditions that they had this summer, very tough extreme drought situations, taking a toll on their vital rivers in Europe and also hurting the corn crop, bringing it down to 58.8 million metric tons. In China, USDA is giving China's corn crop an improvement from 271 to 274 million metric tons. That certainly will help China have to import not as much, but China's demand is still well above their ability to produce corn. So they'll still be a buyer, but according to USDA, perhaps not as big as was earlier thought. The other thing I wanted to point out about Ukraine, USDA increased their export estimate from 12.5 metric tons to 13 metric tons, million metric tons, I should say, for Ukraine. So a slight improvement and a bit of an acknowledgement that Ukraine has been able to ship grain lately. What do the world corn supplies look like in terms of how do they compare to recent years? Well, the red bar on the far right is our new season now, and this is the global ending stocks estimate for corn excluding China. If you recall, USDA has a big 8 billion bushel surplus estimated for China, so we like to ignore that, and China doesn't export corn anyway. So even if they did have that, which I don't think they do, they wouldn't be a factor in the export market. So looking at the corn stocks that are available apart from China, we see the ending stocks estimate at 3.83 billion bushels. That's the lowest basically that we've seen in 14 years. So world global corn supplies, excuse me, I misstated that. The ending global corn stocks for corn at 3.83 billion bushels is not the lowest in 14 years. I'm getting that confused with wheat, but it is down from recent years, as you can see. And part of the trick here is that there could be about another 450 million bushels of corn that's difficult to get out of Ukraine. So that adds to the tightness in corn stocks. But as you can see, the red bar compares fairly well compared to the supply situation that we've seen the past 7 years. Sorry for any confusion there. This is a chart of historical corn supplies, historical corn prices with the ending stocks estimates on the lower part of the chart. And the thing that I like to point out about this is to remind us that we're in a new season as far as the corn price environment. For many years, we were stuck down in a range between about $3 and $4.50 a bushel, but during those times, we were seeing ending corn stocks of roughly 2 billion bushels, give or take a few hundred million bushels. Now, of course, we're in a much tighter situation. USDA today estimating ending stocks of 1.22 billion bushels. That's a 10-year low. So instead of trading in that old low range, that's why we're now expanded out to a higher range now. And it looks like the new range is likely between $5 and $8. December corn trading as we speak at about $6.95. So obviously these are very good corn prices, and fundamentals matter. The supply situation matters, and we just don't have the corn that we've had in recent years. The corn basis is our best clue of demand, and as this map shows, I know it can be a little difficult to read, but basically you're looking at a map of the Midwest, and we see a lot of corn bids on this map, anywhere from maybe the mid-6s up to the low $8 range. But the bids are spread out fairly evenly. So even in the Western Plains, you see some pretty decent corn bids, even if you get away from the Mississippi River. DTN's National Corn Index was at $7.11 last night. That's up 14 cents from where it was a month ago. Those cash bids are staying quite firm. Ethanol demand has helped, but the tightness in supplies overall. The cash basis is 26 cents above the December contract. That's still the strongest in 9 years. So this is a very strong demand market that we'll continue to see here for corn throughout the Midwest. Export sales, as I mentioned, we have not had an update of this from USDA since August 11, but the last we saw corn shipments at the time were 2.27 billion bushels. They were very close to being on pace for what USDA is now estimating 2.475 billion bushels. So I think USDA is basically giving us a little help here on the export sales estimate of what they're expecting that to come in, and that seems reasonable given the pace of what we were looking at before the technical problems happened. Speculative positions, I just need to note before we move on to soybeans. Once again, we saw a sell-off in corn prices this summer in the kind of mid-May to mid-July period. Along with that sell-off, we saw non-commercials, that is the speculators in the market, largely get out of their long positions, and their sell-off into mid-July coincided with some of the lowest speculative positions on the long side of the market that we've seen since the pandemic of 2020. Since that mid-July low, we're seeing the specs start to slowly creep back into the market. We've had 6 consecutive weeks where they've added back to the long side in their positions, but of course they're a little bit behind the curve here because corn is rebounding faster than they're getting back in the market. So they kind of got the worst of both worlds here. They washed out at the bottom, and now they're slow to get back in. But that's actually good news because there's very solid fundamental support for this corn price, and especially in today's report certainly helps that. Okay, let's take a look. What did USDA say about soybeans today? Here's the U.S. balance sheet. Let's start in the second column from the left. That's the old crop season. And we basically see one change in that, and we see a 15 million bushel reduction in the export estimate for soybeans. Now, that's not a big surprise because, as we have talked about for a couple months now, soybean shipments have dragged. The sales have been there all along, but the soybean shipments were just dragging, and USDA kind of acknowledges that they probably did not reach their 2.17 or 2.16 billion bushel export estimate. Today, they're knocking it down to 2.145. So along with that change in the export estimate, the ending stocks estimate for that old crop period increased from 225. Now it's up to 240 million bushels. At the end of this month, September 30th, we're going to have a quarterly stocks report, and it'll show exactly what USDA found for ending stocks of corn and soybeans on the 1st of September. So keep that in mind. We'll have a webinar covering that report as well here on September 30th. Now let's go to the right-hand column, look at the new crop estimate, and if we start at the top, we do see also a change in the planting estimate for soybeans. The FSA report on August 22nd noted that soybeans had almost 1 million acres of prevented plantings in soybeans. Here in the WASDE report, the WASDE board is taking off 500,000 acres, or I should say NASS is actually making this decision, but they're reducing the planting estimate by 500,000 acres, coming down from 88 now down to 87.5. So that obviously is going to limit the size of this crop. The second surprise of the day here is the yield estimate. The trade was looking for something close to 51.5 bushels an acre, but the yield estimate for soybeans USDA found from their field data, they pegged at 50.5 bushels an acre. So that's a reduction from the previous month. Put it all together, we have a new crop estimate in soybeans, 4.378 billion bushels. That's the lowest crop soybeans have had since 2020. That was the pandemic year, and we also had tariff concerns earlier that year. So the smallest crop in 2 years is basically what I'm saying here. There were 2 demand changes to note. The crush demand was reduced 20 million bushels for the new season, and the export demand was reduced by 70 million bushels in the new season. But largely, I think it's fair to say that those demand estimates are being reduced because USDA is acknowledging that we simply aren't going to have the supplies in soybeans. If you look to the bottom in the square, we see the ending stocks estimate for the new crop season, 200 million bushels. That's down from 245 last month, and that is the lowest ending stocks estimate in 7 years if it holds true to the end of the season. So once again, we're dealing with a very tight soybean supply situation, and we're probably going to be dealing with that throughout the month. There was expectation that we might be looking at a new record soybean crop this year, but today's report put a bit of a kibosh on that with the smaller crop estimate. So this is certainly a bullish report for soybeans, and as we talk, November soybeans are trading up 72.5 cents at almost $14.85 on the day. So getting a bullish reaction to today's report. As we look at the state-by-state yields that we have estimated here, we see the soybean map, and it looks somewhat similar to corn. It's in the center and the eastern corn belt where we're seeing the best soybean yields. Obviously, Illinois sticks out with their 64 bushel per acre yield. Indiana looks good at 60. Iowa doing well at 59. Illinois is actually matching last year's total at 64. Iowa's yield is down 3 bushels an acre at 59. Minnesota somewhat made up for that. They have a 3 million bushel increase from last year. If you recall, they had a lot of drought problems in western Minnesota last year. And in Nebraska, though, we see another big hit. Last year, Nebraska was at 63. This year, Nebraska is at 52 bushels. And as you can see, all the western plains from North Dakota to Kansas having a very, very tough time with their soybean yields, as they are with their crop yields this year. Things just don't work as well without rain and moisture, and that's what they're experiencing, obviously. The world balance sheet for soybeans, if we look in the upper right corner, we see a reduction in the soybean stocks estimate from USDA. Instead of 101.4 million metric tons, now we're looking at 98.9 million metric tons. Of course, the smaller crop from the U.S. Was the main contribution to that change. The estimates for Argentina and Brazil and Paraguay all stayed the same, and by the way, planting is expected to start in Brazil later this month, and there is talk of rains on the way, so it looks like they'll be able to get off to a start here with some help from rains. The other thing to note, China's import estimate for soybeans, USDA reduced that by 1 million metric tons from 98 down to 97. So perhaps an acknowledgement of a lot of the economic worries and considerations that are going on in China, even though we really haven't seen a lot of a slowdown in demand from China because of their economic problems yet. Here's the historical prices for soybeans, and as you can see from 2014 to 2020, we were kind of stuck in a sideways range between $8 and $11. Just as the same as with corn, that was also associated with a heavier supply situation, more like 350 to 550 million bushel ending stocks estimates fueled that. We also, of course, had the trade war adding to the supply situation from 2018 on. But today we're in a much tighter soybean situation. Now with USDA estimating 200 million bushels of ending stocks, the lowest in 7 years, soybean prices have obviously broken out and are trading in a new, higher, expanded, and more volatile range, by the way. And even though it says currently $14.12, that was last night's close. So today, soybeans trading $14.84 roughly are doing much better. But obviously, a reflection of the tight supply situation, and that's what's fueling this new higher trading range. Same thing with soybean sales. those export sales have also been in the dark since August 11. As I mentioned, the shipments at that time were 2.04 billion bushels. That was below USDA's estimated pace at the time, so it actually makes sense that USDA has reduced the export estimate today for the old crop season down to 2.145 billion bushels. It's reasonable and I think just a good confirmation of what we've been expecting the past couple months. I should also mention, I do want to also mention before we get the new numbers on Thursday, and I'm crossing my fingers that everything will work well and we'll be able to get those numbers. I wanted to note that the flash estimates or the flash sales announcements that come out sometimes at 8 o'clock in the morning have shown about 62 million bushels of new crop soybean sales announced during this blackout time. So we've seen some active trade or signs of active trade, and typically if you're getting that much in daily sales announcements, there's probably more to go along with it. But again, we'll find out Thursday just how active some of those new crop sales have been. Here are the cash bids for soybeans across the Midwest. And unlike corn, where we saw bids fairly evenly spread throughout the Midwest, in the case of soybeans, it really matters where you live. So if you're off in the Western Plains, you're looking at soybean bids below $14. But if you're in the Iowa, Illinois region, where you've got a lot of the soybean processors, then you're getting bids in the, say, the mid-14s, some of them in the $15 range. And then if you're also close to the river and getting some benefit from export business lately, like they are in St. Louis, you're seeing cash soybean bids well into the $15, some almost mid to upper $15 near St. Louis. So here's a case where location matters, but it's, again, a reflection of demand throughout the Midwest and here, the demand that we have domestically. So it's good to know that we're not just totally reliant on sales to China at this time. If we take the national average of all those bids that DTN collects every day, the DTN soybean index came out to $14.22 last night. Now that's down 82 cents from a month ago, and that is common to see a drop like that happen as we transition from old crop soybeans and we're getting closer to the realization of a harvest. So that trend lower in the cash soybean price is typical for this time of year. But the important thing to note is that we still have a cash basis that's 10 cents above the November contract. And compared to previous years for this time of year, that's still some of the strongest basis values that we've seen in 8 years. So it's still a healthy, active demand market in my view. Soybean crush, this is another reason why I'm very impressed with the soybean demand domestically. And this particular chart is based on January soybean futures prices. And based on that, we can take a bushel of January soybeans going for $14.17, and we find out that the value of the meal and the oil that it produces comes out to $17.07. So that $2.90 difference is a very attractive margin for the soybean processors. It's much more than they usually get this time of year. And again, I attribute it to the popularity of both meal as a feed demand and bean oil as a source of diesel fuel supply that we're seeing more of today. Now, there was another report that came out from USDA just this morning based on the cash prices, and in that report, we've seen quite a drop lately in both the meal and the bean oil cash prices. So there could be some turbulence here as we transition from old crop to new crop. But just looking ahead to January values, it still seems like we have a strong bullish outlook for the crush incentive here. Spec positions in soybeans, much like corn, we saw a big washout of speculators from the long side of the soybean market this summer. But unlike corn, we have not seen a return yet of speculators to soybeans. And I imagine today's report will get their interest And of course, they've already missed out on quite a bit of the rebound. So they washed out when prices were down near $13. They haven't come back yet. But as I say, I think today's report might help convince them, especially if we see soybeans start hitting new highs here. But being up 74 cents on the day is certainly going to be enticing for some of those specs to come back. Okay, very good. That's the corn and soybean portion. Let's take a look at what USDA said on the wheat estimates today. This one's actually very simple. There were no changes to the U.S. balance sheet for wheat. We're still looking at a 610 million bushel ending stocks estimate for the new crop season. The one change in here that I should note is that USDA's average farm price was adjusted down from $9.25 a bushel last month to $9 a bushel this month. So the longer wheat prices just kind of lag around in these cheaper areas, it pulls down that average farm price estimate, but that's not necessarily indicative of where wheat is headed in the future. Similar to the total U.S. ending stocks, when we look at the various classes, we also see no changes in the ending stocks estimates for hard winter wheat, hard red spring, or soft red winter wheat. So all those ending stocks estimates also stayed unchanged. On the world table for wheat, if you look at the upper right corner, we see a slight increase in USDA's estimate of global ending wheat stocks from 267.3 million metric tons up to 268.6 million metric tons. The most interesting changes that happened here were from Russia and Ukraine. In Russia, USDA acknowledged a larger wheat crop. USDA has been a little slow to catch up to the bus on this. Private estimates have been estimating Russia's wheat crop in the 90 to mid-90s for quite a while, and so USDA is just catching up to some of those private views, going from 88 to 91 million metric tons in this report. For Ukraine, they also increased the wheat estimate. Evidently, harvest did fairly well considering the war conditions that Ukraine is going through, and that crop estimate was increased by 1 million metric tons to 20.5. If you look to the rectangle to the right, however, notice that the export estimates for both Russia and Ukraine did not change from the previous week. So even though they're saying, yes, larger wheat crops in those two countries, they're not showing an increase in the anticipation of exports from those two countries. And of course, that remains a difficult, touchy situation with the war going on. And just recently, Russia's President Putin said he did not like the Ukrainian grain deal, and he may not approve it or agree to extend it when it comes up for extension here in November. So a little bit of concerns still in that Black Sea region, and of course a lot of concern as far as the survival of Ukraine and the condition of Ukrainian farmers. World wheat supplies. Now, I'll try not to confuse this with corn, sorry. World wheat supplies, the global ending wheat stocks estimate, including China, was increased slightly to 124.2 million metric tons, or 4.56 billion bushels. That's still the lowest in 14 years. Last month, it was the lowest in 15 years, but this month we got a slight increase, and that took off one of the years that it was lower than. So just a slight increase there. But overall, the main thing to consider here is that we're still looking at a very tight supply situation globally as we head into winter, and that typically leads us to believe that we're going to see higher bids for wheat prices as we get into the winter time. The history of cash HRW wheat prices, much like corn, we had a 6 to 7 year period from 2014 or 15 to 20 when wheat prices were below $6 a bushel, and at that time we had ending wheat stocks of roughly 800 million bushels to 1,100 million bushels. Today, USDA is estimating 610 million bushels of ending stocks. That's the lowest in 9 years. And that's why you see the big breakout in wheat prices. Of course, that was part of that was the emotionalism of that went along with Russia invading Ukraine earlier this year. But the significant move up is due to tight wheat stock situation, which is still in play. Today's report did not change that a lot, but we're still looking at tight wheat stocks. Now, today's report, corn and beans were higher. Kansas City wheat's down 3 3/4. Chicago's down 12 1/2. Minneapolis wheat is down 4 3/4. So nothing too exciting for wheat traders in today's report. Just to show you the basis level in wheat, it doesn't have the same strength as what we see in corn and soybeans. The current cash basis is 42 cents below. That should be the December contract, sorry. Anyway, that's the weakest of the past 4 years. So we don't see a strong demand situation at the current time for Kansas City or hard red winter wheat, but the cash prices are holding up very well. The national average of our DTN index, 887 last night. The speculative positions in wheat, now I've showed you we've had big sell-offs in corn and soybeans. In the case of wheat, the speculative positions were sold off even harsher. By the time we got to our lows on the wheat price just a few weeks ago, the long positions that non-commercials or speculators were holding at their time actually reached their lowest level in 7 years. So that's been quite a washout of traders from the wheat market this summer. And frankly, much of that was overdone, and it's not respecting the tight fundamental situation that we have in wheat supplies. So even if you don't grow wheat, I think it's still good to know that it's a tight supply situation, and because it is, it also supports the price of corn and soybeans indirectly, mainly corn in this case. In conclusion, overall, this report reaffirmed a lot of bullish themes that we're already seeing in the market, but also brought a little bit of its own bullishness. In the case of corn, even though U.S. ending stocks were slightly higher than expected, they're still at their lowest level in 10 years. So, you can't really say it's bearish because it came in above expectations. This is still a very bullish supply situation. And of course, Ukraine's production and their ability to export grain continues to suffer through the war. For soybeans, this definitely was a bullish report. Not only did we see a smaller than expected soybean crop, we saw the lower yield, we saw a lower planting estimate, and now we're looking at the lowest U.S. ending stocks in 7 years. That was unexpected in today's report, and that's why we're getting a big reaction upward in that soybean price. And then lastly, the wheat report today was overall neutral, but because global ending stocks are still near their lowest levels in 14 years, we still have to say that this report supports a bullish outlook for wheat prices. And so that would be the summary of today's reports. Thank you for joining us, Stephanie. This is a great time if there's any questions that have come in.
Todd, it looks like you've covered everything. I don't have any questions that came in this time.
Okay, fair enough. Well, thanks, everybody.
Thank you, and I'd like to thank everyone for joining the conference today. As a reminder, today's event has been recorded and the rebroadcast link will be up on dtn.com in about 48 hours. Also, if you have any additional questions or would like more information regarding our topics today, Todd's contact information is listed here on the screen. This concludes our event. Thank you all for joining and have a great rest of your day.
Thanks, everybody.